NIO stock ended the week in rather uneventful fashion, closing Friday's session essentially flat at $7.37 per share. The move was up by just half a cent, which rounds to a gain of about 0.1%. In other words, after a week filled with breakout moves, sharp rebounds, and volatile swings, Friday was a day of balance. Bulls and bears traded punches, but neither side was able to take control. For investors who've been following this story closely, the flat finish might feel underwhelming. But in many ways, it's an important signal, because it suggests consolidation and stability at a time when the market is still digesting the aftermath of NIO's billion-dollar equity raise. Tonight, let's dig into what this flat session means, whether there's any new news behind it, and what investors should take away as we head into the weekend. First, a reminder of just how dramatic the past week has been for NIO. Less than 2 weeks ago, the company surprised the market with an announcement that it would raise about $1 billion by issuing 181.8 million new Class A shares, priced at $5.57 per American depositary share. The offering represented an 11% discount to the market price at the time and created the potential for significant dilution. Investors reacted negatively, sending the stock down nearly 9% in a single day. That sharp drop rattled confidence and raised tough questions about NIO's financial strength, its cash burn rate, and whether management was scrambling to shore up liquidity. But as is often the case in the market, the story quickly evolved. The $6 level emerged as a strong support point, tested multiple times and defended each time. Buyers stepped in, seeing value at those levels and recognizing that the raise, while painful, also strengthened NIO's ability to fund research, expand its battery swap network, and launch new models. The recovery was swift. Last Thursday, NIO bounced more than 6%. Friday added another 2.5%. Monday carried momentum further with a 4.4% gain to close at $6.49. Tuesday was the breakout moment, with the stock surging more than 8% to finish at $7.02, its first close above the $7 mark since the equity raise. Wednesday extended the rally with another 6% jump to $7.45. Thursday brought a modest pullback to $7.37, down about 1%. And today, Friday, the stock closed flat at that same $7.37 level. So, after all the volatility, NIO ends the week at exactly the same place it finished on Thursday. The difference is in how we interpret that. On one hand, a flat day after such strong moves might suggest a stall, as if buyers are running out of energy. On the other hand, it can also mean the stock is consolidating its gains, building a base above $7 before attempting the next leg higher. To figure out which interpretation is more accurate, let's look at what's driving the stock. The first thing to note is that there was no major new news released Friday. No filings, no product announcements, no analyst upgrades or downgrades. That lack of new information matters because it means the stock's movement, or lack thereof, was driven primarily by technical factors and market sentiment rather than external headlines. After 4 straight sessions of significant swings, the absence of a catalyst created a kind of equilibrium. Profit-taking played a role as well. After all, traders who bought below 6 or in the mid-6s had seen gains of 20% or more by the time NIO reached $7.45 on Wednesday. It's only natural that some of them would lock in profits along the way. That selling pressure explains why Thursday slipped slightly and why Friday saw limited upward momentum. But importantly, the selling wasn't aggressive. Volume was lighter compared to earlier in the week, suggesting that most investors are comfortable holding through the weekend. Technical factors are also at play. $7 was the resistance level that NIO needed to break. Now that it has done so, 7 has flipped into support. That's a healthy development. The next resistance zone sits around $7.50, with $8 as the psychological milestone beyond that. On Wednesday, the stock approached $7.50 and backed off, which is common when resistance is tested for the first time. Thursday's 1% decline and Friday's flat close both look like consolidation around the $7.37 mark, not a reversal. If support at 7 continues to hold and the stock can build momentum, another attempt at breaking $7.50 is likely in the near future. Short covering remains a background driver. With nearly 195 million shares sold short, representing about 12% of NIO's float, the stock has a built-in source of potential buying pressure. Earlier this week, as the stock climbed above 7, many shorts were forced to cover, adding fuel to the rally. By Friday, that effect had likely cooled, but the elevated short interest means any future upward moves could again be amplified by covering. Fundamentally, NIO continues to deliver strong operating performance. August deliveries came in at a record 31,305 vehicles, up 55% year-over-year. In the second quarter, deliveries were 72,000, up 26% from a year earlier. Revenue reached $2.7 billion, losses narrowed to $567 million, and gross margins improved to 10%. These numbers don't erase the fact that NIO is still burning cash, but they do show progress. Combined with the $1 billion from the equity raise, the company now has more flexibility to invest in its future. Looking ahead, the big near-term catalyst is NIO Day 2025, scheduled for September 20th in Hangzhou. This annual event is the company's chance to showcase new models, technology, and strategic updates. Investors are expecting the unveiling of the third-generation ES8 flagship SUV, as well as updates on the Onvo L90 family SUV and the Firefly compact EV brand. These product launches are crucial for NIO's strategy because they expand its reach across multiple market segments, from premium luxury to family vehicles to entry-level EVs. Investors often buy in advance of events like this, anticipating that announcements will generate excitement and drive the stock higher. The battery swap ecosystem is another long-term driver that remains intact. NIO's network of swap stations offers a unique value proposition, allowing customers to replace a depleted battery with a fully charged one in minutes. Many customers subscribe to battery-as-a-service plans, creating recurring revenue streams. The equity raise will help expand this network further. If NIO can execute successfully, battery swapping could become a durable competitive advantage, differentiating it from Tesla, BYD, XPeng, Li Auto, and Xiaomi, all of whom are focused primarily on fast charging. But risks remain. Dilution from the equity raise is real. Shareholders now own a smaller slice of the company, and that will show up in per-share metrics. Price competition in the Chinese EV market is fierce. Tesla has been slashing prices to maintain market share. BYD continues to grow aggressively. XPeng, Li Auto, and Xiaomi are all introducing attractive new models. This competition has already pushed NIO's average selling price down from $38,000 last year to around $31,000 today. Lower prices squeeze margins, even as deliveries rise. And then there are macroeconomic headwinds in China, a slowing economy, weaker consumer demand, and the phasing out of subsidies. These factors all create uncertainty. So how should we view today's flat finish? In my view, it's more constructive than it might seem at first glance. After a week of sharp moves, consolidation is healthy. The fact that NIO closed above $7.30, well above the crucial $7 support, indicates stability. The absence of heavy selling suggests that investors are holding through the weekend with confidence. And the proximity of NIO Day provides a clear catalyst that could reignite momentum in the coming sessions. For traders, the key levels to watch remain $7 on the downside and $7.50 on the upside. If NIO holds support and breaks resistance with volume, $8 comes into play quickly. For long-term investors, the focus should remain on deliveries, revenue growth, margin improvement, and how effectively management uses the new capital to fund expansion. In conclusion, NIO stock closed Friday session essentially flat at $7.37 per share. While that might not grab headlines, it represents a consolidation of gains after a breakout week. There was no new news driving the stock today, but the fundamentals remain intact, the technical setup is constructive, and the anticipation for NIO Day is building. This is a moment for cautious optimism. The rally may have paused, but the setup for the weeks ahead is still compelling. As always, this isn't financial advice. Do your own research, weigh the risks, and decide how NIO fits into your investment strategy. But one thing is clear, even on a quiet day like this, the story around NIO is evolving, and the next big chapter could be just around the corner.